Gold just crossed $4,000, the highest price in human history. But here's the real question. What does that tell us about the world we live in right now? When gold skyrockets, it's never just about jewelry or investment. It's a signal, a warning that something deep inside the global financial system is breaking. And in 2025, that warning light is flashing bright red. Today, we'll break down why gold prices are soaring, how geopolitics is reshaping the global economy, and what this all means for the future of money. For centuries, gold has been humanity's ultimate store of value, outlasting empires, currencies, and even wars. Whenever the world falls into chaos, investors and nations alike rush toward one thing they can still trust: gold. And in 2025, that rush has turned into a stampede. According to global market data, central banks have bought more gold in the last 2 years than at any time since the 1970s. Nations like China, India, Russia, Turkey, and even Poland are loading their vaults with bullion. Why? Because gold isn't just a shiny metal anymore. It's political power, economic independence, and insurance against instability. Let's talk about the elephant in the room, the US dollar. For decades, the dollar has been the backbone of global trade. Oil, debt, imports, exports, everything revolved around it. But that dominance is now being questioned. America's national debt has soared past $35 trillion, inflation remains stubborn, and the Federal Reserve is stuck between high interest rates and political pressure. At the same time, Washington has increasingly used the dollar as a geopolitical weapon, freezing assets, cutting off countries from the SWIFT network, and leveraging sanctions to enforce policy. That strategy backfired. After Russia's foreign reserves were frozen in 2022, many nations quietly realized that holding dollars isn't risk-free anymore. If your wealth can be blocked with a signature in Washington, is it really your wealth? The answer led to a simple move: buy gold. Unlike dollars, gold can't be sanctioned, seized, or printed. It's neutral, apolitical, and globally recognized. The world is no longer unipolar. The old US-led order is being challenged by new power blocks, and gold is right at the center of this transformation. In the East, the BRICS alliance Brazil, Russia, India, China, and South Africa has expanded and is now openly discussing a gold-backed trade settlement system. The idea is simple: trade in local currencies supported by physical gold, bypassing the dollar completely. Meanwhile, China is executing its strategy quietly but relentlessly. Through the Shanghai Gold Exchange, it's been absorbing hundreds of tons of gold, often undisclosed, while cutting its holdings of US Treasuries to the lowest level in 15 years. India is hedging against currency volatility. Russia has turned to gold to stabilize its post-sanctions economy. And Middle Eastern nations, flush with oil profits, are also converting part of their surpluses into gold rather than US bonds. Together, these actions tell one story: the world is de-dollarizing, and gold is the bridge to the next phase of global finance. Economics is playing its part too. Every time the Federal Reserve signals rate cuts or money printing, gold jumps. Why? Because low interest rates make holding gold more attractive. There's less opportunity cost compared with cash. Add in tariffs, trade disruptions, and rising commodity prices, and you've got a recipe for renewed inflation worldwide. And inflation is the best friend gold ever had. Investors see what's happening. They're not just buying gold bars, they're pouring money into gold-backed ETFs, mining stocks, and even digital gold tokens. In 2025, global inflows into gold ETFs are 6 times higher than models predicted. That's not speculation, that's fear, dressed as investment. Here's the twist: the United States still holds more gold than any other country on Earth, roughly 8,100 tons locked in vaults like Fort Knox. Yet the irony is hard to miss. As other nations accumulate gold to gain independence from the US, America's own policies are accelerating that very trend. Every sanction, every trade restriction, every round of quantitative easing makes global investors question whether the dollar's supremacy can last forever. And that's why gold's rally isn't just about price, it's about trust. When trust in institutions fades, people turn to something that doesn't require faith, a lump of metal that survived every empire before us. So where does this all lead? Some analysts believe we're witnessing the early stages of a financial realignment, a slow but steady move toward a multi-currency, asset-backed global system. In that world, gold acts as the neutral foundation, not controlled by any one nation, but respected by all. Others warn that gold's current surge could cool if geopolitical tensions ease, or if the dollar rebounds. But even they agree. The reasons behind this rally, debt, distrust, and division aren't going away anytime soon. As the world fragments, gold becomes the glue holding financial confidence together. Let's be honest, we're not watching a simple price hike. We're watching a shift in the world's power structure. Every bar of gold added to a nation's vault is a quiet declaration of independence. Every ounce bought is a bet against the future stability of paper money. And every dollar that loses trust brings us one step closer to a gold-anchored era once again. So, the next time you see headlines shouting "Gold hits new record," remember it's not just about markets, it's about a world preparing for the next financial reset. Because when confidence fades and currencies crumble, there's only one asset left that everyone still believes in: gold. Follow for more real stories behind global power and money.